Hey, welcome back, friends. I want to explore what everyone is saying for next year and how it could be wrong. I want to go a bit deeper. I have Bitcoin overlay with interest rates of the US Fed. And you could put it with the stock market, but I want to use interest rates because they will reflect the pricing of the bonds more. And most people just visualize the relationship of Bitcoin and crypto to the real world. They only talk about stocks. They say, Bitcoin moves with stocks. But if Bitcoin and crypto are building all the things that we know they're building, they should reflect something from the bonds as well. So I like to look at interest rates because the bonds, if bond yields get too low, you start to explore other stuff, right? And I don't know if all the stock market money is going to reflect that in the future. So this is why I have interest rates here. So I've written up here, 90% of every analyst I've watched, they have bearish views for 2023. This is everyone in crypto, right? This is so many people, bearish views for 2023. Bearish. The rates are too high. Unemployment rate's going to get crushed. Earnings are going to go down. So everyone has a bearish view for 2023 on the economy and a bearish view for stocks. All right. However, how are they going to, they have to get screwed somewhere. I don't know how they're going to get screwed exactly, but one scenario I have is they get the economy part right, but they get the stock market part wrong. That is what I think is possible to play out. And if we go back in history, let's just look at Bitcoin with interest rates. Bitcoin in the previous bear market, this is what happened. In the last few hikes of the Fed, Bitcoin capitulated, stocks as well. And then the Fed said, all right, no more rate hikes. That's something to note, right? And then look what happened. Bitcoin made the bottom. Let's remove this. Bitcoin made the bottom, right? Yes, it was plus token Ponzi, but it was while they were holding rates. So take that note. Bitcoin made a bottom while they were holding rates. Let's have a look here. This is what I'm going to draw the dot plots of what the Fed expects. They expect rates to go up here and then hold for all next year. That's what they expect, right? So we have a weaker economy today than pre-COVID. So if they were able to hold, this is 6 months, by the way. They held rates for 6 months here. If they held for 6 months and they had to already start cutting before COVID, I mean, obviously we're speculating here, but I just don't see how all these zombie companies are going to be strong with the strongest aggressive rate hikes in history. I don't see that happening. If the previous one was 6 months, I'm just going to say maybe this one's 3 months, right? But here's the thing. They're saying they're going to stop the hikes around March, April. They say they have a few more to go. So, if you take them at their word, you have to understand something. Let's go back to December 2021. Do you want to know what the dot plots were for the US Fed? They said rates would be 0.9% in 1 year. So they said by 2022, where we are today, rates would be here. That's what they said. And instead, look what happened. Look, these guys are evil scum. They're central bankers. They know exactly what they're doing. But you can think they're incompetent. It doesn't really matter, right? Look, the important part is that they're wrong. Don't worry about the intention. Assume they have good intentions, Doesn't even matter. Look how wildly wrong they are. And this is very, very common in history. So, can you really expect them to do this and go, yeah. And by the way, here's the funny part. Yeah, we're only going to cut to this much, 3.9%. That's what the yield curve says. That's what the Fed's saying. I'm not even making this up. 3.9%. Never, ever before do you see them going, yeah, we just need a few more cuts, everything gets on track. Never happens, man. Never. They need to go, crap, everything's going really bad. That's always what happens. So, but this makes sense, right? So, if you come to me with this information, I know a lot of people get confused by this, but why this makes sense is because crypto is underpriced. you know, and stocks might be underpriced. Maybe, we don't know. So if we think crypto's underpriced, it's the market's kind of telling you, oh, the market's basically saying we are down at this price because we only think they'll cut rates down to 3.9%. All right. So, but if you sit here, this is why, you know, this is the beautiful game of markets. If you sit here and say, all right, never in history do you only cut by this, you go the full way. And by the way, the US yield curve is implying they need to cut by 500 basis points. So effectively, they have, so this is, I'm looking at the left-hand side here. This is 3%. Actually, we go all the way back to 0. So effectively, the yield curve, this is the yield curve, right? The yield curve is actually saying they're going to cut this much. I know it's crazy, man. I know it's crazy. But they're saying that they're going to cut this much. Okay, that's what the yield curve implies. And that means this red line I've got here, that is the gains, the reward the market has not priced in. That is the gains you'll get if you buy bonds now. You basically buy the curve now, anticipating that. So if you buy bonds for this play, that is the reward you're going to get because it's not priced in. And you got to think, okay, if bonds go down there, where's crypto going to be? And now you can kind of see if this plays out, right? If the data starts turning more aggressively and as it plays out, then maybe crypto does get an echo bubble, right? Maybe it does get an echo bubble. So this is one way we can see things playing out. And if we go back, this is also, right, we've got to look at this part. I want to show you this part. Look when Bitcoin did the recovery again. When they held rates for those 6 months. That's when they did the recovery. You know, is that what happens again? You know, does the Fed like hold and Bitcoin does something like this? You know, and then when the Fed starts to cut, maybe we actually come back down. Something to think about. Something to think about. That would be the echo bubble we're kind of looking for. That would be exactly it. Because this is what no one's looking for. Everyone's looking for, I'm going to draw the scenario now. Everybody is looking for, okay, well, everyone said we're going to go to 10K and then we didn't. We stopped because FTX saved it. Basically, FTX didn't get liquidated 6 months ago. We had 6 months of weeding them out. So basically, instead of, the way you think about it is, all the panic money that would have sold on this week, they had like an extra 6 months to slowly sell, to sell other items and stuff. That's how you can kind of think about it. You're giving the market more time to digest, right? And then FTX came here. It sent us to 15K. And you got to look at where we are now. So people who are still expecting this, they're saying, no. There's more worse to come. There's more worse to come. And you never know, man. Maybe they're right. Maybe they're right. Because let's go back. Back in the final rate hikes, right? Bitcoin capitulated and, the stock market capitulated too. So we don't know. Maybe they do the final rate hikes and that leads with maybe crypto going down with stocks, some bad stuff happens. That's something that also is a possibility, right? But obviously the main important part is we go back to this. 90% of the analysts are expecting bearish view for 2023. So they're expecting bearish data and bearish stocks. Bearish everything. And if only it was that easy, right? Because there's actually no strong correlation between getting earnings right and the stock market direction. So even though earnings might be low, then the stock market doesn't necessarily go down. So, here's the thing, right? Even in COVID, earnings was bad, but the market still went up. So this is the part of psychology that we're really, really getting a grip on it. It's like a never-ending puzzle, right? So the good thing is, though, we at least know from history, if the bear market is ending, hopefully it should be ending soon. And if they actually do this rate hold and we get some sort of echo bubble, I think it would be really wise. When we look up here when they start cutting rates, it would be really wise just to start thinking about maybe you get out 20%, 25%. You keep something on the sidelines just in case we do start seeing the US economy turn harder than people expect and they have to start cutting rates. Until next time, friends, I'll see you later.